Hey guys, it's Stephanie Johnston over at the Johnston team of Service First Mortgage. Wanted to share a little update with you guys about interest rates and what is going on. So a lot of movement here in the last couple weeks for rates, a lot of news. They're great, they're changing. There's the Fed cut rate, and what does all this mean? Probably not what you think. It's a little bit different, a little bit more to it. So we're going to go through that real quick right now. So again, if you watch some of my other videos on YouTube, on our YouTube channel, the shows kind of what this is. Behind me is our chart with mortgage-backed securities. So the main thing to look at on here, the higher this number is, the better rates are. The lower this is, the higher that rates are. So it's opposite. So red is bad, green is good. So the main thing to look at on here is, so the Fed cut interest rates on, I believe it was the 18th, so right over here for reference. And as you've noticed, before that, we actually had a really big rise in rates. So from the 4th here down to the 13th, it looks like we actually had about a 0.5% increase in rates that quickly, like a week. And that's not normal. That's not what we normally see, but that definitely can happen as we witnessed here in the last couple weeks. So one of the main reasons, okay, why? The Fed actually cut rates. Why are mortgage rates going up? Well, the Fed cutting rates doesn't always, it ties into what interest rates are, but it's not a direct correlation. And there was a couple of main reasons that we feel like this had happened. So rates dropped a good amount before the Fed announced the interest rate reduction because that we knew that forecast, they all thought that that was going to happen, and that was already baked into the interest rate available at a given time when we come back over here to the 4th and prior. And a couple things on this, we actually thought, or the forecasters thought, potentially we were going to get 2 rate decreases for the rest of the year. And then it's now becoming a little less likely that that's going to be the case. And we probably were only going to get this one that happened last week. So instead of 2, we're saying, okay, now only 1. So we actually need to correct rates now for the Fed not dropping rates here in the coming months. Part of it. A lot of other things in the economy and tariffs potentially getting worked out, things of that nature. Those type of things are all going to move rates in a different direction. So there's a lot to it, and the main thing again is rates change every single day. They are still at historical lows. So you see we've also rebounded a little bit, so what goes down usually has to come up and vice versa. Again, I say usually. But the main thing, I think this was a great lesson for us to learn, is everyone said, well, I want to wait. I don't want to refi yet. I want to wait longer because I think rates are going to go lower. And it's just like buying the stock. We want to make sure we time it at the best possible point, but at the end of the day, if it is good enough and you have the opportunity to lock in your rate at such a good deal, should probably say okay and take it versus continuing to play the market, because again, as you see, what we gained in, over 2 months, we lost in a week. So just as a reminder to us all on this, but again, rates are still very, very good. For your customized rate quote, always give us a call. Still making sense to refinance a lot of people. Again, a great rebound here, and this is not doom and gloom here. Rates are still fantastic, just a little bit of an adjustment from what we were used to here in the last couple of weeks. So again, it's Stephanie Johnston over at Service First Mortgage, the Johnston team, and I hope you found this information helpful. Thanks. Have a good one.